Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So, let's get into the analysis.
And I think we have to start with the financials, but not just the numbers themselves. It's the massive acceleration we're seeing.
That's the perfect word for it. Acceleration. I mean, they just generated, about $180 million in revenue for Q3 2025.
Which is already up over 40% year over year. That's high growth by any standard.
It is, and that growth is coming from more launches and, critically, their space systems division really taking off.
So that's high growth. Where is the street projecting them to land for the full year and, looking beyond that?
Well, consensus suggests they'll finish this fiscal year, 2025, somewhere around $600 million in revenue.
Okay, so a solid number.
A solid number, but the real insight, the thing you have to focus on, is 2026. The estimates there jump to around $880 million.
Wait, so from 600 to 880 million, that's nearly 50% year-over-year growth.
Exactly. It means the growth is actually speeding up, and that points to an accelerating scale, especially as these high-value defense contracts start to really convert into revenue.
What's driving that conversion? I know they have their launch vehicle, Electron, but how significant is the satellite side of the house in all this?
Oh, it's absolutely critical. That shift is the whole story. Space systems.
So that's the satellites, the components, all of that.
Exactly. Satellites, components, mission services. It's now becoming the growing majority of their revenue.
And what's the catalyst for that?
The biggest driver is the recent award of somewhere between $805 to $816 million in U.S. Space Force and SDA satellite contracts.
$800 million. That one award essentially doubled their backlog, right?
It did, overnight. And that provides extremely strong multi-year revenue visibility. Plus, over half of that is expected to convert in just the next year.
That visible backlog, especially from national security, seems like a huge strategic advantage. I mean, what makes their position defensible against the giants?
It's their core moat. It's the vertical integration, the full stack, as they call it.
The one-stop-shop model.
Precisely. They design and manufacture the Electron rocket, they build the satellite buses, they make the components, and they handle mission integration. Very, very few competitors can offer that complete package.
And the Electron itself still has a solid place in the market.
It has an entrenched position. It's one of the few reliable, high-cadence, small launch providers out there. I mean, they did a record 21 Electron launches in 2025 alone.
Okay, we have to talk about profitability, though. With that kind of high growth, are they actually making money yet?
Not yet, no. The company still runs GAAP net losses and negative free cash flow.
So the launches themselves aren't enough.
Currently, the Electron launches alone are not sufficiently profitable, and their gross margins are, subscale. But the bull thesis isn't really focused on today's unit economics.
So where does the path to profitability lie then?
It really hinges on two things. First is that continued mix shift toward the higher margin space systems contracts we were just talking about.
The defense work.
The defense work. And second, and this is the big one, future Neutron economics.
Okay, that brings us to the biggest upcoming catalyst, Neutron.
Exactly. Neutron is their medium-lift, partially reusable rocket. It's slated for its first launch in Q1 2026. This is the single most important near-term event for the company.
And it's not just about bigger payloads, is it?
No, it moves Rocket Lab completely upmarket. It lets them capture business that currently goes to higher-cost legacy primes. It even lets them compete on different missions against larger players like SpaceX.
Targeting that responsive medium-lift niche, right, for constellations.
That's the sweet spot. And management has suggested that once Neutron is at commercial scale and their revenue hits that, say, $1.2 to $1.5 billion range.
Then the margins change.
The margins could move into the mid-30% to 40% range. That's the game changer.
And analysts are seeing this path.
They are. They expect EPS to improve from negative 38 cents in 2025 to negative 24 cents in 2026. So it's consistent with that increasing operating leverage.
Well, let's look at what this execution and this promise has done to the stock price. It's been on a tear.
A tremendous surge is putting it mildly. The stock is up nearly 190% in 2025 and over 1,500% over the last 2 years. It's been pushing all-time highs recently, around $86.
That's just explosive. Technical analysis must be catching up to that momentum.
Absolutely. We're seeing a clear trend of higher highs and higher lows. Some technical commentary even noted a cup with handle breakout.
So people are looking for even more upside.
New extension targets are now being discussed in the $95 to $103 range. It's also become a huge retail favorite. It's actually the heaviest weighting in the Goldman Sachs GS memes basket.
Which confirms that strong speculative capital flow. But, high momentum usually means high valuation. What's the major bear argument against this run?
Valuation risk, that's the primary overhang. It trades at about 48 times forward revenue.
48 times. That's optically very rich for a pre-profit company.
It is, and the bears argue the current market cap, $40 to $44 billion, already prices in flawless execution on Neutron. It prices in more big defense wins.
Leaving very little margin for error.
Exactly. Very little.
And there was quite a bit of insider selling recently, wasn't there? That probably didn't help.
Correct. We saw over $150 million in insider selling over the past 90 days. That includes some large trades by the CEO and the COO.
And how do people read that?
Well, most were pre-planned transactions that happened after that huge rally. But, skeptics will use it as evidence that insiders think the current price is, well, pretty highly valued.
So how do the bulls counter that valuation point? It's a tough one.
They argue the high multiple reflects a scarcity value. I mean, it's one of the only publicly traded, vertically integrated space platforms out there.
And its national security role commands a premium.
A huge premium. And the key differentiator they point to is that billion-dollar-plus visible backlog anchored by U.S. government contracts. That reduces the business risk you see with other high-growth, unprofitable tech names.
Okay, so we've discussed Neutron as the catalyst, but it must also be the greatest risk.
It is. The entire bull thesis depends on its successful, timely commercialization. Any major technical setback, a delay, a launch failure that could severely damage sentiment and drive up capital expenditures.
And then there's the looming shadow of SpaceX.
Always.
Yeah.
SpaceX's massive capacity and their aggressive pricing are a constant threat. However, the U.S. government strategically avoids single vendor dependence.
Right, they need a second option.
There's a structural need for a second major supplier in critical mission areas, and that's the role Rocket Lab is solidifying right now.
Beyond Neutron, what should investors be watching for in the next few months?
Late February 2026 brings the Q4 earnings report. A revenue beat and improved 2026 guidance would be huge.
And you'd want to hear specifically about Neutron milestones and cash burn.
Exactly. Backlog conversion, cash burn, Neutron updates. We also expect potential updates on the SDA and DoD programs, plus continued tailwinds from the proposed record U.S. defense spending.
So if we step back, Rocket Lab appears to be a multi-year growth compounder. It's anchored by these massive government contracts offering exposure to the new space theme.
Right.
But it requires investors to underwrite a pretty high execution risk on their Neutron project.
That's the thesis in a nutshell. It offers this rare combination of proven execution today with the potential for just transformative scale tomorrow.
So it's for those who are comfortable with that high beta momentum.
Yeah, if you're comfortable with that and the execution risk, the outlook remains compelling over, say, a 2 to 4 year horizon.
Excellent analysis. If you enjoyed this conversation and found the insights useful, please make sure you subscribe to Smart Wealth with Joshua for our daily stock analysis.